O.B.S Financial and the Wealth Management Store.com.ca is proud to present the Canadian Emergency Wage Subsidy informational video on how to use the CEWS calculator. As always, we have a legal disclaimer. Basically, please note that the information contained in this presentation is for illustration purposes only and should not be construed as personal professional advice on accounting or how to apply for any of the Canadian Emergency Measures Act's benefits. That being said, you should make sure that you're talking to a professional who understands everything before you do this, as the penalties being held by the CRA will not be nice for anybody that they catch cheating. Not to threaten anybody, but I have to explain it that way. By the way, my name is Stacey Bartel. I'm founder and president of O.B.S Financial, O.B.S Tax, and the Wealth Management Store. As part of our ongoing series of managing the COVID-19 crisis, this presentation is part 3 of our business edition. Today, we're going to be talking to our valued business partners and fellow business owners about the newly released CEWS calculator. Over the next little bit, we're going to be talking about a few things, including what is needed for the CEWS application, how to use the CRA CEWS calculator, how to get prepared for the application process. So just to put some context to this, the application process starts on April 27th. So that would be Monday, April 27th is when you're going to be able to apply through your CRA My Account portal. The calculator was released yesterday, which was April 21st. So we've had a chance to play around with the calculator, and we're going to show you how to use it because you can make some mistakes really easy, which could cause to some massive double claiming or triple claiming if it's not being done right. So we always need to understand what we're doing is correct. And that's why we're here today. We're also going to just make sure that we're talking about confirming your eligibility and talking about compliance. So I guess to start off, one of the things we're going to need to do is we're going to need to learn the calculator in order to determine what is eligible for the CEWS subsidy. So we're going to go right over to the CRA calculator, and I'm going to run this live here. So just open up a browser and type in the CRA CEWS calculator. Get a Google search on it. Make this bigger. If you click on here, you're going to come to the CEWS Calculate Subsidy page on the Government of Canada website. So a couple things to understand about this page. This page will tell you or has links to find out everything that you need to know about it. Now, as most of us business owners, we're skimmers, we're not readers, which is why we've done up the other video on the CEWS wage subsidy, how to determine if you qualify and how it interacts with all the other benefit programs around. So that is it's almost a prerequisite to this video to make sure that you understand where we're at, but I will refer back to it a couple of times. If you're ever unsure, you can do things like taking a look at the math behind the subsidy calculation. It tells you how to use the calculator. But more importantly, once you get down in the claim period, there's 5 things. I think it's 5 sections. And from what I can tell, this is going to be the application process come Monday. So I believe that this is just going to be mimicking what's happening. So they're going to want to know what your claim period is. You're going to need to be able to use the calculator to understand who all is eligible and to what. So this go back to the video we had. There was the maximum CEWS, which is $847 a week. That's what the first section talks about. The second section talks about employees who earn less than the maximum and have not received a reduction in pay. Okay, how that gets calculated. And then the third one is for those employees who have experienced a reduction in pay, either due to a reduction in hours or they're receiving a reduced rate of pay and they're working at home or being paid or receiving paid time off. And that calculation is in here. This gives you all the nuts and bolts as to how the calculator works, which is step B. There is a section here that talks about an adjustment for employee working related entities. For those business owners that are incorporated, that would be associated corporations. So if you have associated corporations, you have employees that work for both, they're not allowed to claim under each company. They have to, because they're associated, you have to break the claim up between the two companies. For those that aren't incorporated and they're run as sole proprietorships, if you own two businesses, and this is kind of what it talks about, you own Westside Restaurant and Eastside Bar, and you have Mary who works full-time at one and part-time at the other, the spreadsheet calculator will determine the amount that they're allowed, but you also have to make sure that Mary does not exceed the 847 maximum for that week or for each week. So that's important to understand. Going into section C, this is the nuts and bolts of the calculator. The three main things you need to report to Revenue Canada is how many employees, what the total eligible remuneration paid to these employees during the claim period is, and the total basic CEWS subsidy application that you're applying for. We then go on to step 3. Step 3 is for when you have employees who are furloughed or put on leave with full or partial pay. So if you have an employee, if you have the cash flow to pay your employees to stay at home, pay them 75%, which is better than the CERB payments or the EI payments. If you have the cash flow that you can do that, and you're doing that for your employees, even at a reduced rate, you'll qualify for additional compensation for CPP, EI, and in Quebec, QPP and QPIP. Now remember, two things need to happen with that. Number one, the employee needs to be paid. And number two is they can't be performing any duties. So you can't sit back and say, okay, well, I'm sending you home. You're going to do work from home. You're going to answer your emails. You're going to do this and you're going to do that. And we're going to pay you 75% of your wages. They are now doing work and they will not qualify. So leave with pay is exactly that. No answering phones, no answering emails, no doing anything else in order to qualify for this benefit. Okay. As with this calculator, if we're not claiming anything, we have to put zeros in on everything. I'll talk about that now. And then when we get into deductions, these deductions would be for any claims that were made under the 10% wage subsidy for employers. That was the one that was released in March, and you're not allowed to double bank. So this would be for if you made a claim when you did your April 15th remittance for March, you were able to take 10% of your gross salary off of your remittance on any salary that was paid from, I believe, March 16th or March 18th. I can't remember which one it was, but if you made any claims in March for that, you have to enter that amount here and it'll reduce what you had. And I'll show you that in the example because we're going to be working through some live data here. And then if you had anybody involved in the EI work sharing benefit program and you received any funds for that, you have to place that in there, right? Then once you're finished, you'll get a calculation on how to do this. So now we're into this for a few minutes already, but it feels like we haven't even touched any of the goodies. So let's get into this. So first things first, let's download the calculator, shall we? So we're going to click on download the calculation spreadsheet, and it's going to open up in Excel. And let it open up, and what you're going to see is it's made of 3 pages. The first page, or the first worksheet, is instructions and results. So we don't fill anything out on here. This is what you're going to use at the end. Then there's 2 spreadsheets. One if you pay your employees weekly, and one if you pay them bi-weekly. So if you pay your employees weekly or bi-weekly, you would select one of these sheets. Now, if let's say you have mixed payroll, so you pay your full-time employees bi-weekly and your part-time employees weekly, you can combine and put your weekly paid employees on one and your bi-weekly employees on week 2. But there's something that's missing on this calculator that they provided for us. And that is for employers that pay monthly or semi-monthly. So that would be the 15th and the 30th, or the 1st and the 15th of the month. Unfortunately, we don't have a calculator set up for that. At that point in time, I would definitely talk to your accountant or your accounting professional so that they can calculate exactly how it is and possibly build or modify a calculator for you to bring it back down into weekly earnings, because that's what it boils down to, is weekly earnings. Okay. So now we understand that, what information are we going to need to know? Well, first of all, let's take a look at the worksheet. You'll see that there's two sections. There's the top section here, lines 1 to 6, and then lines 1 to 5, and then lines 6 to 7. Now, most common mistake that when I first gave this to my staff and had them test it out, first mistake we had is that they used both areas. You do not use both areas. The top section is for batching employees. So batching employees would be if you have a whole bunch of employees that are absolutely identical, right? They all make the exact same amount of wage. They all make they all have the same conditions whatsoever. You can use the top. I would not suggest the top. So the nice thing that the government did do is they gave us a little minimize window here. So if we click on the right beside number 5, if we click on the little minimize button, so I got to enable editing on here. If we click the minimize button, you'll see that whole top part collapses back in. So once it's collapsed, then we know that we're only working on one area and we won't get confused. So let's take a look at the information it's looking for. It wants our employee's name, the average biweekly gross pay, the 2-week pay for period number 1, and the 2-week pay for period number 2. Because remember, there's multiple payrolls in this payroll period. So now we need to gather the information. All right. Okay. So where do we get the information from? Well, I'll tell you what, there are literally hundreds of different payroll softwares out there. I don't have the time or don't have the knowledge or experience because I don't deal with all of them in order to help you out. So I'm going to use one of the most common ones. I'm going to use QuickBooks, and I'm actually going to use the desktop version, but the online version, you can run the reports basically the same way. So what we're going to do is we're going to run into, so any software, you can go into your report function and you want to find the reports to deal with employees and payroll. Now, we want to find the right report that's going to give us all the information that we need. So we can take a look. So in here, I'm going to take a look at the payroll summary, and this gives me, okay, I see all the employees here, but this is a pretty long list. By the time I scroll down, across the, there's 3 rows for every employee. And, here we have, I don't know, 10 employees maybe. It ends up taking a lot of space. So I personally don't like this report. I'm going to go and take a look at this report that says payroll transactions by payee. And no, I definitely don't like that one. We're going to pull that one out. So then I'm going to go back in and I'm going to hit employee earnings summary. Now, oh, look at this. Okay. So we have 3, 6, 11 employees. So it is 3, 6, 9, yeah, 11 employees, all in a nice condensed little area. Now, what kind of information does it give me? It gives me what their hourly pay was for the period. It gives me their overtime pay. It gives me their RSP matching. So that's how much money the employers paid in matching. It gives me their deductions for federal, CPP, EI, the employer's portion, vacation pay, RSP deductions, dental health, and other taxable benefits that would be applied. So this is an ideal report to do it. Now, if we go back to our spreadsheet here, they want to know what our average biweekly gross payroll was from January 1st to March 15th. So let's go back into QuickBooks here, and we're going to change the reporting period. We're going to go January 1st to March 15th, and we're going to refresh it. So here we go. Now we have our 11 employees and all of their hours and everything else. Now, I always like putting it into, dump it into Excel because we can manipulate it. We can figure out whatever we need to pull out for information. So I'm going to put it into Excel. Now is the time I'm going to jump back into our presentation, and we're going to talk about, because we've now downloaded the calculator, we're printing the payroll report. Now we're going to talk about what wages are eligible. So As I discussed in our video last week on the CEWS, I'm just going to show you here. We're going to go into Revenue Canada, and part of the CEWS talks about what is eligible remuneration. So the Canada Revenue Agency says, or the Government of Canada says, that eligible remuneration includes amounts you paid an employee as salaries, wages, and other taxable benefits, fees, and commissions. These are amounts employers would be required to make payroll deductions on and to be remitted to the CRA. So in other words, these are taxable amounts. This is amounts of money that you add to an employee's pay, take tax off of it, take CPP off of it, take EI off of it, or even if you're only taking the tax off of it because it's not a pensionable item, it is still something that becomes taxable to them, right? So because it becomes taxable to them, right, and I'm going to highlight this, employers would be required to make payroll deductions on or be remitted to. So let's go back to my list here. Now I'm going to point this section out down here. Please note that the above is based on our company's interpretation of what the CRA considers taxable benefits, wages, and fees. At the time of production, they have not provided us with a defined list of what counts and what doesn't. So as of today, there is no defined list, only their brief description. Having said that, some of this information could be wrong. However, we are using the best knowledge that we have available to present this to you. So the wage types would be allowable would be wages, salary, and hourly pay. Fees, bonuses, commissions, and overtime that would normally be paid. So if they get sales bonuses, production bonuses, commissions, overtime, if it's something that would normally be paid, that gets added into this calculation. Accumulated vacation pay, employer paid benefits, which would be group life insurance, disability, CI, things that the employer may pay for themselves. And this is important to understand. If the employer pays for it on behalf of the employees, so if you as the employer pay for it, it is an eligible remuneration item. If you deduct it off the employee's pay and they pay for it, it is not, okay? So this has to deal with your living benefits, your group, your disability, your CI, short-term, long-term, those types of ones. If they're reported, okay, so we're going to clarify this again for your accounting and bookkeeping staff. If it is reported in box 14 and box 40 of their T4s, if you pay it and it gets added to their T4s and it's for group benefits, then it would be covered. Now, if it's pension or group RSPs, and I need to talk about this because most pensions would not qualify because the pension does not get added to your income and then taken off. A pension is something the employer pays on behalf of the employee, but deductions are not taken off of it for CPP or EI purposes. Group RSPs, however, are. With a group RSP, the employer pays, normally it's a matching program. So the employee takes $100 off and the employer matches it and gives them $100. What happens with that in the background is the $100 is added to the employee's pay and then it gets taken off. So it gets added to the employee's pay for one thing, and it's calculated for CPP and EI, so therefore deductions are being met. And at the end of the year, the employee is receiving an RSP contribution receipt for the amounts that were added to his income. So it's added to his income and then taken off for tax purposes, but it does sit there on the books, so therefore it is a taxable amount. A pension, on the other hand, isn't. So again, this is something that you're going to need to review with your professionals, with bookkeepers or whatever else to make sure, or accountants or tax guys to make sure that it's calculated correctly. Let's talk about the disqualified amounts. Severance pay. So we're going to go back to the CRA website because I always like to point this out, right? Severance pay and items such as stock option benefits or the personal use of a corporate vehicle are not part of eligible remuneration. So severance pay, employer's use of vehicle, employee's portion of CPP and EI. As much as that's a cost to us, it is not something that we tax or deduct. So now this is where I really got confused because even after making that video and when I first started doing this, I included it in my calculations. Same thing with I included health and dental because I pay for that for my employees. But because it's not a taxable benefit, health and dental is a non-taxable benefit, we cannot include it. At least that's the assumption that I'm making. Also, we're assuming that the employer's portion of CPP and EI, because we don't deduct tax off it, and because there's also the reimbursement if employees are on paid leave, that's what tells us that we can't include that. Okay. All righty, let's go to the next point. Yeah, this gets to be quite a bit. So we have our Excel spreadsheet. Let's take a look. All right, so we have our 11 employees here, and we have their pay over the 2.5 month period. Okay. Now let's take so best thing to do is I always like, let's go through first of all and color the ones that we know would count. Now, hourly pay, let's compare this back to our, I'm going to minimize this, go back to our sheet here. So hourly pay, is that on that list? Yes, it is. So I'm going to highlight it yellow. RSP matching. Now this is the amount that the employer adds to the employee's pay for determining and making CPP and EI contributions. So we're going to add that as well. Federal income tax, CPP, both portions, EI, both portions, we said no. Vacation pay, yes, it's something that we have to pay. It's on top of the wages and we deduct taxes off of it. Even though it's accumulated, we may deduct taxes off of it later. It is accumulated. If the employee is not working, there wouldn't be taxes deducted when they take it. So that's what happens there. Or in a lot of cases with part-time employees, we pay our employees out their vacation pay per paycheck. So that's where it fits into there either way. RSP deduction, that's an employee pay deduction. Then we have dental and health care plans. We know that that isn't there because they're tax-free. So those are the three areas that we need to look at calculating. So what we're going to do is we're going to create our own column here. And this is going to be total CEWS wages. And we're just going to add a quick formula in here. So we know that we need to go to the vacation pay plus the RSP matching plus the hourly. The total wages that we would end up having here are $3,295.20. Now, just pay attention here because this $29.10.55, that is what that's the total of all of these across. So if I go through and total all these across, you'll see at the bottom screen here in the sum, that's after the deductions. That's the employee's net pay. So we don't need that. Now, I also am the type of person I like to hide columns that I don't need. So I don't need any of these. I'm gonna hide them. Not going to delete them just in case, just so I can pull them up down the road because we're going to be saving this for audit purposes anyways. These are the three that we're using, and now we need to figure out an average, right? So average biweekly pay. Now, let's go back into our report because this is the total for that period of time. One thing we didn't look at is how many payroll periods did we have in that period of time. So let's double click on one of here, drill down. See, this was our January 3rd, 17th, 31st, February 14th, 28th, and March 13th pay. So that's 6 payroll periods altogether. We're going to close this. We're going to go back into our workbook, and we're going to go equals the total amount here divided by 6. And so for Bart Coyote, his average biweekly pay was $549, but Bart is a part-time employee. Let's take that, the formulas, copy it, paste them down the row. We'll just add a sum onto it here. And here's what you see. Here's your total wages that are eligible, right, over that period of time. And here's what your average is. Now, I like finding things in columns. So what I'm going to do is I'm going to make this a table real quick, right? So here's our table. So I have all the employees. Now it's just broken up by different line colors. This is fantastic. Works good for me. So let's minimize this. Put this off to the side here because we're going to need this for our other report. So let's pull up our calculator. Here's our calculator, and I'm going to minimize the calculator. Put these side by side because I'm lazy and I like to do a couple of things here. So the first thing we're going to do is I'm going to take all the employees' names. That's the first thing that's asking for here. I'm going to copy it and I'm going to paste it. Then I'm going to go across and I'm going to take their average pay, which is what we need. So I'm going to copy it and I'm going to paste it in here. Now, it didn't accept it, okay? If I change this to currency, it won't work. If I change this to a number, it won't work. So over here, what I need to do, and it'll be in this calculation here, and I'm just kind of showing you this, we need to take this here and we need to make it a number. And we're going to try pasting it back in here because we're going to see which way it works. Okay. This is live, so this is where it becomes a problem. We just want to put in dollar amounts. So when we go into paste values, we're just going to paste. We're going to do, okay, we're going to do this again. Paste options, special paste, and we're going to go into, we want to see numbers and formatting, and here we go. Now we have the dollar amounts in there. And you'll see that it's already made some calculations in here as to what we're looking at. So we know that it's accepting the dollar amounts. Okay, so those are the two hardest things done. That's the two hardest things done there. Now, what we need to do is we need to run the same report for each pay period. So what we need to do is, now we went to the 15th of March. So we need to go from the 15th of March to the next 2-week pay period, which would be to the 29th, and we're going to refresh it. Okay. So based off of that 2-week pay period, okay, being refreshed, we have this. So now what I'm going to do is I am going to put this into another spreadsheet. Now, I never import into an existing spreadsheet because it takes forever. You have to save it, close it, open it, and do a bunch of other things. So I just like to move it around. So as this builds itself up into here, okay, report's getting sent into there. Okay, we have our new report. So I'm going to rename this worksheet, and I'm going to call this March 16th to, what was the payroll period on here? To the 29th. Okay. Now we have that. Okay. So I like keeping everything, you know, I'm a big person, you know, I believe in making sure that we have all of the information that we need everywhere. I don't know where my, hold on, I'm going to just pause. Okay, sorry about that, I'm back. So here's a prime example of saving your work. So while I put you on pause, I had to redo everything I just redid because the I had a glitch in my system and it shut down the spreadsheet. So save your work, save your work, save your work. So you'll see now I have file company name saved on top. Okay, let's go back into where we were. So now we've downloaded the January 16th to 29th. So again, we know which columns are eligible. Now this one here, we're adding a new one, which is overtime hourly, because we did have some overtime available in there. Now the next one is the accrued payroll. So we've highlighted all of that. I'm going to hide the columns we don't need. All right. Don't need that one, hide it. Now here, okay, so let's take a look at how did we calculate this. So we have two headings here. I'm just going to copy the two headings. Now, unfortunately, we can't use the same calculation. We just need to make sure we're on top of this here. Put in the two headings. And we know we need to go equals this plus this plus this plus this. Okay. And now here we also don't need the average because this is for a period, so we can actually delete that altogether. So this is our CEWS wages. So I'm going to copy it, paste it down. Okay. So again, hit save, make sure we're safe there. Am I still recording? Yes, I am. Need to double check. Just for those, this is my second time doing it. I went through the first time, I accidentally hit pause and redid it. So I'm getting to be better at this one way or another. Okay, anyways, one more time, what we're gonna do is we're gonna make this a table just so we have the right colors. Okay, the table has headers, yes, all right, perfect. Now it's nice and clean, easy to see. We're gonna minimize this. Now, I prefer working in the same worksheet, and this is something I should do. So I'm gonna take the copy of the CEWS calculation number 1 spreadsheet. What I'm gonna do is I'm gonna take this one from January 1st to 15th. I'm gonna right click on the sheet at the bottom. I'm actually gonna double click on it and I'm gonna go January 1st to March 15th. Then I'm gonna right click, move or copy. I'm going to move it to the CEWS calculation sheet and I wanna move it to the end, right? So we move it over, now I don't need that spreadsheet. I'm gonna go over to this other one. This is the March 16th. We're gonna take that, we're gonna move or copy it. I'm going to move it back over to the CEWS sheet again, move it to the end. Okay. So this way, when it comes for an audit trail, I'm going to have everything in here, including a copy of my profit and loss showing that my revenue values were down for the period of time. So I'll have one audit trail book all in here, able to show Revenue Canada when they come knocking on the door, making it nice and easy. So we have this information here. So what do we need? What do we know we need to know? Well, we have the employees' names already. We need their total wages for the period of time. So go into the biweekly and we're going to put this in for the first period. Remember, we have to paste special with the numbers in the formula. So here we go. Okay. Then we're going to do the exact same thing from the 30th to, actually goes to the 11th. So we're going to refresh that one more time. I'm going to create a new worksheet. Now, what should I have done? I should have went into my, should have saved everything before I jumped into it, before I downloaded, just to make sure we don't have any problems, because you'll see, yeah, it just did it to me again. So I'm going to pause, I'll bring it all back, but at least I had everything else saved. Hang on. Okay, I'm back, and let's go and do the same thing. Now I have this new spreadsheet, the new spreadsheet downloaded here, and this one is from what dates? March 30th to April 11th. Let's label that March 30th to April 11th. Okay, so we know that hourly, overtime, hourly, RSP matching, and vacation is our, they're the key ones that we're looking for. Hide the rest. I guess I could have just did this quickly for you guys. Well, I had you on pause, but at the end of the day, like I said before, practice makes perfect. Okay. And this is the CEWS wages. Okay. And again, we're going to make that a table real quick. And what are we going to do? We're going to take, we're going to move or copy this. We're going to move it back over to that CEWS calculation worksheet. We're going to move it to the end, back over. Now, we're going to save it. Okay. Now, we're going to copy. We're going to go back to the biweekly. I'm going to put that back in here. Now, I just didn't put those in with the colors. No big deal. Okay. But let's make sure that everything's correct. So Bart was 1,048. He was 1,048. Right? And he was 549. So all these numbers. So let's, and the reason is here, you know, I could show you the, let's see. I'm just going to show you here. What you'll see is that we have a, this is just the list of what we did to create all this and the amount of the hours that the employees worked every time. So, right, Bart E and Ricky Coyote, they're normally part-time employees, but you'll see they're working a lot more hours. So we've selected certain things to explain in here. So for the purpose of understanding this. Now, let's look at our calculation sheet as it's all done. I can close this. I don't want to save that. Make sure that our CEWS is saved. I'm going to double save it again. Let's go and take a look here. So let's look at the calculations, right? And I'm actually just going to quickly make this a table if it's going to allow me to. All right, so we've made it into a table. This way we can just see the numbers and break it all out. So let's take a look at Bart Coyote. Okay, so Bart's average income is $549. Okay, that's what he was beforehand. Now, during this period of time, he was working some overtime and whatever else. So his salary is actually $1,048. Oh, let's talk about the arm's length. Okay, this becomes an issue here. Well, you know what? I'll explain that. Let's explain the process here. So 75% of 1,048 is 786.30. So right now, all of these columns are at 75% or a maximum of $847 a week or $16.94 biweekly, because we're looking at this as a biweekly pay sheet. So you'll see that YLE, the owner of the company, is at $16.49. Bugs is at $6.49. Elmer Fudd is at $16.49, and Roxanne are at $16.49. Those are the 4 employees that exceed the minimum. Then the rest that exceed the maximum. Sorry, the rest of them are all exceed the minimum, right? So that gives you your 75%. But there's some different calculations to look at here. So first of all, we need to go arm's length or not. Now, what is an arm's length employee? An arm's length employee is somebody who is not directly related to the owner or the majority shareholders of the company, somebody who has a controlling interest in the company. So Bart E. Coyote, part-time, you know what? It's Wiley's son. So is he an arm's length employee? No, he is not. Okay. Bugs. Bugs is just another employee. He is arm's length. Elmer Fudd is arm's length. Okay. Poor Pepe Le Pew is arm's length. So I don't know if you caught this. I'm going to move Bart E. Coyote here. Okay. So this has to deal with arm's length employee calculations. First one to talk about. Bart is the son of the majority shareholder. This is where the average biweekly gross pay comes in. For this is to deal strictly with arm's length, because Bart's pre-crisis salary averaged $549.20. The maximum that we can get from Bart. Now, if Bart wasn't, let me go back here. If Bart was not an arm's length employee, it was Bart the dog, right? Then Bart would get paid 75% of what his wages were for each payroll period. Okay. However, he's not. So the minute we change him to a no here, what you're going to see is that his subsidy allowance drops from $549 to $411. Or sorry, from what it was. Okay, so who else is the same? Ricky, right? Ricky was the same wages. So where Ricky here is at 786, Bart is not. And that's because there's the whatchamacallit. That's because it's the arm's length rule. The way the arm's length rule reads, if you remember going back to the video, is it has to be based off the pre-crisis income. So you can't give a relative or a friend or go and hire a relative. Oh, you know what? The government worth down 30%. The government's going to pay me 75% of my salaries. My kids got taken out of school. I'm going to bring them in and I'm going to pay them $1,200 a week because the government's going to give me back $849 of it. No, that can't be done. It can, you know what? If it's Bart's friend, yeah, no problem. You can bring him into work. But this is where nepotism comes into play, and you cannot do this for non-arm's length employees. So therefore, because Bart had had a situation where he was earning money beforehand, he qualifies, but only up to 75% of his normal pre-income situation. Now, the rest of these guys here, so let's go through and take a look at this. Porky Pig, he's an arm's length. Ralph, right? Ralph Wolf, you know, you guys, Ralph, the sheepdog Ralph. Yeah, okay, yes. Then we have Ricky Coyote. Now, Ricky is a nephew, not arm's length, right? Now, so he gets 786. Now, if Ricky was another son, guess what? 411.90. But in this case, he is a nephew. You know what? Just no, he's arm's length, right? We're not going to we can't play any games, so we're not playing any games. We're just going to put him there. So he's a no. Now, Roxanne is a no. Okay. Sylvester, yes. YLE, the owner of the company, no. And Yosemite Sam, yes. Okay. So now what you'll see here is Roxanne, she still gets the maximum because the maximum is within that 75%, right? The 75% of 2260 is higher than that. But let's say her amount was 1160. Her amount was 1160. Now she's only qualified for 870 every 2 weeks because that's what happens to her salary. Now let's just undo that because that's not where we're at. So if you can see the calculations on there, you will see that in here, the ones with the arm's length have had special rules applied. Okay, are we good there? Now I want to talk about another situation. So we've talked about 75% of 100%, 75% of 100% of the employees who did not receive a wage reduction. So we've actually talked about three things here. We've talked about guys like Elmer Fudd, right? He is Elmer Fudd and Bugs Bunny. They are guys that exceed the maximum. They get the maximum 1694 or 847 every 2 weeks. Okay, pretty clear. We talked about the arm's length employees and what happens and how they're limited based off of their pre-crisis salary. Now the last one is let's take a look at what's happened here. So we have, who is it that I had here? All right, let's talk about Ralph Wolf. Okay, Ralph, prior to the pre-crisis, Ralph was working and he was making $22.20 every 2 weeks. Okay, Ralph is in a different department. Okay, he's instead of inside the factory making the bombs and the signs and the parachutes and all the rest of it, he's out there protecting the sheep. But the problem is the sheep are all under quarantine. So the sheep are all stuck in their caves. The coyote is not able, the coyote and the wolf are not able to come out and go and hunt the sheep. So therefore, Ralph isn't needed. Ralph he doesn't need to work the overtime that he was and all the rest of it. So his salary has actually dropped. And during the pay period, right, during this pay period, Ralph only made $14.25 a pay versus before he was at $22.20. Well, look what Ralph's rebates are. Ralph isn't, so Acme will get covered the entire $1,425. Why? Because it's under the $1,694, because it's under the maximum, and it's close to the 75, and it's less than 75% of his income. So he will get reimbursed 100% of 75% of his salary, right? He's had a reduction. The company is still paying him to stay at home. You know what? Ralph's a good valued employee. They want to keep him around. They don't want him suffering. They're saying, look, we have the money to afford to do this because the government's going to reimburse us. We're going to keep you on salary, but we're only going to pay you $14.25, right? So that $14.25, okay, what does that work out to? 22.20 times 75%, right? It's actually 16.65. So we could have paid him up to 16.65 and he would qualify. If we paid him 16.70, he would still only get the 16.55. You see that? Because the 16.55 is the maximum. So really what we should be doing is we should have ended up, be a really nice guy to him, make sure he maxes out and pay him 16.55 bi-weekly so he stays there, to increase the salary. It doesn't cost the company anything, but he's able to do that. Now, did we have anybody else that was like that? Okay. Same thing with Porky Pig. Porky Pig was at 1572, right? And he's only at 1198. So 1572 times 75%, 1179. Okay. So here, what you'll see is he's getting paid 1198. They're only compensating him for 1179 because that's 75% of his wage, right? So now you'll see how that 100% to the 75% work. Make sense? Okay. So now we're pretty much done. Let's take a look at the front sheet. So here's what the front sheet is. We're going to sit back and put our claim period, March 15th, okay, to April 11th. And we have this calculator. We have 12 employees. Okay. Why do we have 12 employees? Let me just take a look. Well, I only see 11. Oh, because we have this one that says because we have this column 1 in here. But yeah, so it's actually only 11 employees. So we just want to verify to make sure this is correct. So it's actually 11 employees. Okay. The eligible remuneration. So we are going back and we're going to take a quick look. The eligible compensation on here is $39,052, and we see that in the sum of selected cells in the bottom right here. 39,052.0. We're going to verify it and make sure 39,052.0, because as much as formulas are there, we want to make sure that we haven't done anything to screw up the formulas. The spreadsheet wasn't locked down. It always scares me when we have a spreadsheet that's not locked down, because you can change a formula and screw everything up. And that's probably what happened to this 1112. Now we're going to take a look at the compensation. So if we take a look here, this is our total claim, $26,495.90. $26,495.90. Okay, Bob's your uncle. We're done. We're good. Now what we're going to do is we're going to save this. So we're going to go File, Save As. We're going to call this April 11th CEWS claim with supporting documentation. Okay, so now we're audit proof. Like I said, the only thing we're missing in here is the salary reductions for the company, or the revenue, gross revenue deductions from the company, not profit and loss, revenue. All right. So now we have those numbers. Let's go back to our spreadsheet or to our website. So we're going to go back to our website, back to the calculation page. We're going to minimize this so we can look at both of these at the same time. And now we're going to go to our calculator. Okay. So what do we want to know? First of all, they want to know how many employees. Well, we had 11 employees. Then we want to know what the total eligible remuneration paid to these employees during this claim period is. Okay. So that's this amount here. It says something different on this screen here, right? That says gross biweekly pay, but this way you can see it. Bring this back down. The amount is $39,052, and it's not asking for any cents. Then what is the basic CEWS deduction? This is how much money the company is getting back, $26,495, right? And there's no cents, right? And you'll see it did not round it up. Now, we round, in my world as an accountant, we round up and down at the 50-cent mark. So we're going for the next here. Every dollar counts when we're suffering through this. Now, total EI and QPP premiums that you paid on salary not to eligible employees, okay? Again, this has to have been without pay. So do not include your CPP and EI. Same thing here, right? Do not include it. Make sure you put it in as zeros unless, well, that's actually not true. In this case, and the one thing that I did not calculate in is, okay, if we go back and remember this, in this case here, we said that Ralph was actually at home being paid. So we need to take a look. Let's unhide all of these columns. This is why we keep everything here, right? Unhide. For Ralph, I hate all these little columns here. Okay. For Ralph, we get to calculate the company CPP and EI. So if we take a look at Ralph Wolf here, we're going to go equals company paid CPP plus company paid EI. Okay, now this calculates everything. I'm going to go back and hide these columns here. Okay. And what I'm going to do here is I'm actually going to highlight all of these red except for Ralph, because he is the only one that is entitled to this. So 9367, we're going to go back to here and we're going to put, right? Actually, we have to pull, okay, it's not 9367 in total. We have to break out the CPP and EI. So I know which ones are which. Hold on here. I'm just going to redo this calculation. Okay, I'm back. So you'll see I've now broken down to CPP and EI. So when we go back and take a look at the spreadsheet here, we know that the total EI was $30 and the total CPP was $64. Now we go into section 4, amount you are eligible to claim under the 10% wage subsidy program. So we need to go back here, and what we need to do is we know that for the wage subsidy, we were able to calculate anything from the 16th to the 31st of March. Now with that, it had to deal with gross salary. So again, we are going to, let's wait here, save this spreadsheet. Let's not make that mistake. Okay. Now we're going to go back into here and we are going to create a new spreadsheet again. Now, you should have kept a separate report. Honestly, you should have kept a separate report when you did your payroll submission on April 15th to determine how much money you reduced it down. I'm going to show you if you did not do that, you put it in here. Now, if you weren't aware of the 10% subsidy or you missed it, then at that point in time, we would enter 0. So in this case, what we're doing is I'm going back into here. This is March payroll reduction. Okay. And again, what we're going to do, so now that one there had to deal with salary. So it was equal to this plus this. Okay. Plus this. Copy it all down. I'm going to do an auto sum here. And then here, this is going to be 10% reduction equals this times 10%. Okay, so the reduction would have been $1892.10. So now we go back to the calculator here. $1892 is what we would have taken off of our payroll remittance. Now we're not part of the work sharing program, so we're going to put a 0 in there. Now, before I do this, I am going to move and copy the sheet back over into my April 11th CEWS sheet. I'm going to move it back into here because again, we want to keep everything, save it. We want to keep everything for audit purposes. So here's our 10% reduction. We've included that on here and we put a 0 for this. Okay guys, we're almost over. Now we're going to click on calculate your weekly subsidy and you can print this. So if you click on print preview, this is what it's going to look like, right? Print the statement. But at the end of the day, we're just going to back up. Okay. And we have that in here. So now we're done. That gives us what our calculator wage subsidy is. And we're just going to click on how to apply. Now, this is going to talk about how to apply and make sure you're in place, right? We want to be able to make sure you're signing into your business account. We want to make sure that you're set up for direct deposits, right? This talks about incorrect or fraudulent claims. If you do not meet the CEWS eligibility requirements for a period, you'll be required to repay any amounts for that period plus penalties, right? The penalties are 25% of the total value. So we don't want to get involved in that, right? Go back, make sure I didn't miss anything on here. So make this bigger. We've talked about that. We've talked about the 10% wage subsidy. Okay, qualifications. Let's just review the qualifications again. Your revenue must have dropped by 15% or more in the months of March. So March 2020 compared to March 2019, or March 2020 compared to the January, February average of 2020. April, it needs to be 30%. May, it needs to be 30%. Accounting processes, you have to use cash or accrual. But remember, all of these things you can't mix. So if you're doing March year over year, you can't go April compared to January, February. You have to either go all of the black or all of the blue. And in here, once you pick a method, cash or accrual, you have to pick it. Be consistent, right? You know, I like the slide. Oh, I can't show you that slide. So I can go back down here. I like the slide because I like the dog. But anyways, if you look at here, make sure you're consistent, right? For reference periods, make sure you're using year, or January, February average. And for accounting, either cash or accrual. Don't flip-flop. That's going to get you into trouble. All right. Let's move on forward. What's next? Okay, next episode. On Monday, I am going to run through the process. I'm going to do another shorter presentation on the differences, if there is a difference as to how to do this. So I don't know if we're going to have a new application and motion video. We won't know until Monday when we sit back and do some applications for some of our clients, but we'll be able to look at taking some screenshots. We're going to put that into a PowerPoint presentation a lot slower and show you how to actually do it depending on how different it is from here. I know this has been a long video, you guys, but I'll tell you what, the calculator is complicated. And this shows you how to make all the calculations. Make sure you're talking to a professional to get it done so you're not making errors, you're not overclaiming, you're not double claiming, right? My name's Stacy Bartel. I'm from O.B.S. Financial. Check out our website. Okay, I'm going to bring you up here. This is my sales pitch, www.obstax.com, right? We've been in business doing this for 30 years, almost 30 years, right? Our contact information is there. We have a complete tax registration and upload center. So honestly, you guys, if you need help, of course, there's a fee for it for our time. But if you need help, we can help anybody from across the country. You can upload, send us documents, transfer us documents. We can help you out with anything that you need to get help with countrywide. So don't hesitate to call if you need help. Of course, you know, the video is free. The rest is, you know, as they say, the video is free. The rest is paid. So, okay, guys, I want to thank you again for tuning in. And I hope this video has been helpful. Please pass it on to people. Please let people know what we're doing out here. We're spending a lot of time in our busiest time of year informing people and businesses through this important crisis. I'd like to see more people subscribe to our channel. I'd like to see that. You know, that's the thanks that we get. I know, you know, we've had a couple hundred views on different videos. Nobody thanks us. Nobody likes us. You know, we're not looking for a lot here. Just, you know what? If you appreciate what we're doing, hit the like button for us. I really appreciate it. Anyways, guys, don't forget to check out our COVID-19 news channel, right, where we talk about our business, our personal. And this one here, we still haven't got it done. We're hoping to get a bunch of it done up in the next couple of days. And it's going to be things that you can personally do to help you out of the COVID-19 economic crisis. Okay, guys, once again, my name's Stacy Bartel. Thanks for checking in. We'll talk later. Have yourself a great evening.